Hello, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. This is Morning Forex Technical Report, where I take a look at some of the major currency pairs. Today's date is March 3rd, 2023. Let's get started. Although it's the first Friday of the calendar month, we do not have U.S. jobs report coming out today. That's going to be delayed to next week as a result of the short February month. So the calendar is fairly light. We do have ISM non-manufacturing index coming out at 10 a.m. The expectations are 54.5 versus 55.2 last month. That'll do it for the rest of the economic data. So a fairly quiet day. We have the U.S. dollar as one of the weakest of the major currencies. The pound versus U.S. dollar is the strongest, but most of the currency pairs are fairly scrunched together and up and down trading. Let's take a look at the euro versus U.S. dollar. If we take a look at that currency pair, you can see the up and down trading that is occurring in this currency pair, and that up and down trading is happening around the converged 100 and 200-hour moving averages. When the price and the two moving averages can converge, I call that threes a crowd. One of them has to move, and that it is the price because the moving averages stay fairly static. So they're going to remain around this level, around the 1.0614 level. But at some point, the market's going to decide which way it wants to go. Does it want to move away from these moving averages to the downside, or does it want to move away from these moving averages to the upside? So if we take a look at this chart on the downside, we do have this swing area here. And yesterday, what happened, the market came down to test that swing area, not once, but twice. And the market found support buyers in each of the cases and moved higher in trading here today in the Asian session. We tried to stay below the 200-hour moving average, but could not sustain any sort of momentum. As you can see, the range is very narrow here. You're in trading today, and we are currently trading back above those two moving averages after trading above and below those moving averages earlier in today. So the buyers are trying to make an early play in the early U.S. session to the downside. We will see if that momentum can continue. If so, then we would look probably toward this area right here, this swing area where a number of different swing lows through here gave way to some swing highs right there, and then back above the level and back below the level. And in trading this week, when we moved up to the high price, we did extend above that range, but fell short of the 38.2% retracement of the move down from this high over here to this low right through here. So that rotated to the downside for the week. 1, 2, 3, 4, 5. The low was on Monday down at 105.32. That was the cycle low for the euro versus US dollar as well. The high was midweek on Wednesday, and as you can see, we're trading basically in the middle of the trading range and right near those 100 and 200-hour moving average. So what else can I say except look for the break and momentum in the direction of the break to either take ourselves up to this area. On the downside, we look to get below this area to increase the bearish bias. Let's take a look at the dollar versus yen next, and on the hourly chart for that currency pair, we've seen similar up and down price action, I guess, in trading this week. The low price was reached in on 1, 2, 3, 4, 5 on Wednesday. That low price stalled against the 200-hour moving average. That's the green line in this chart. And as you can see in trading here today, the market is moving back down toward that 200-hour moving average. This would be the third test of that moving average and a key barometer for more bullish staying above, more bearish moving below. So pay attention to that level in trading today, 135.73. If we move below it, we look toward this swing area here where we had different swing highs. We had a little failed break there and then reestablished it here before moving to the upside. And in trading here where the market fell to the 200-hour moving average, we also tested this swing area through here. So that would be the progression if the market is able to break below the 200-hour moving average to then go down test this 135.11 to 22 level on the downside. If we break below that level, look toward the 38.2% retracement of this move to the upside. On top side, if we hold the 200-hour moving average for the third time, we would look back toward the 100-hour moving average, 136.33. If we get above that level, we have the 100-day moving average, and then we have 200-day moving average. This week, the market moved in between the 100 and 200-day moving average in trading yesterday, not once but twice, and then failed on the breaks of the 100-day moving average before getting the 200 and rotated back to the downside. So sellers above, buyers below. We'll see which way, if the market can make a break on this Friday. Let's take a look at the pound versus US dollar. And if I were to put a box around this pair right through here, you can see that the price action has been to the downside, to the upside, to the downside, to the upside, to the downside this week, and now back up to test the 100 and 200 hour moving averages in between this up and down trading range. Those moving averages come between 1.2017 and 1.20269. Get above that level and we tilt the bias back in the upward direction, stay below that level, and we could see a rotation back to the downside and keeping the sellers more in control in this up and down trading action for the pound versus US dollar. So that's a key area up here, and as you can see, we are trying to or we are moving up toward that level, and we'll see what happens here at the 100 and 200 hour moving average. On the downside, watch the 100-day moving average. That comes in at 119.745. Break below that level, and we could see further momentum in the downward direction back toward the 200-day moving average, which, by the way, held support in trading yesterday. We did have a small break here going back to Monday's trade, but that could not be sustained. And on Friday of last week, the market did hold support near both the 200 and 100-day moving averages. So you can see the price action and the moving averages influence on that currency pair definitely in play, both from the hourly perspective and from the daily moving average perspective. So there you have it, a look at some of the major currency pairs. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.